All right, welcome back to another analysis video. Anthony Speciale here with Speciale Analysis. Hope you're having a wonderful day. So, taking a look at the IWM here, this is the sector or iShares for the Russell 2000 ETF. So, Russell 2000 is the small cap index. This is the ETF that tracks that index. An ETF, for those of you who don't know what it is, it's called an exchange traded fund. Essentially, it's a fund that manages shares of futures contracts so that others can participate without actually being in the futures market. So you can use ETFs, you can use options on futures, options on ETFs. The tools out there today compared to the tools that were out there 10, 15 years ago for the retail trader, are completely different. You can do so much more with so much less today. So I want to just kind of point out a couple price points here on the IWM that I think are meaningful. So we are testing meaningful resistance right now where we are here at 189.58 currently. That's where we settled for last week, right at this minor resistance channel. You can see we've tested this here in the past. Price has failed from it, but price has also created a higher low. So that tells us that there is strength building. So when we create higher lows, so this is our low here, this is our higher low here. When we break this high here, when we break it here, we should extend further, okay? Now, we have resistance clearly defined up in this area. So I have two targets here. If we break above this 189 half handle, I think we go to this 196 half handle. And I think if we break that, we extend somewhere to the 201 half handle. So we have a couple of little pitch shots here. I mean, these are our bump and run trades. These are not huge grand slam ideas, but leveraging these with some options can make, for some substantial profit. So that's why I'm sharing this with you. I think it's meaningful that we are placing higher lows. And, with that in series, we should now place a higher high. So I would anticipate a break of this resistance area. You can see we're trying to get through it. Should put us in this 95, 96 half area. Which is ascending, meaning with time it gets higher and higher and higher. And then above that, we have this orange structure. So that should be taken in consideration. And even beyond that, we have 211-ish to take in consideration. So a couple upside targets. Want to let you know I am seeing a series of higher lows kind of come into place here. Some of you go, but there's lower highs here. And there are. So that's why it's so important to take this out. So it would have to look something like this. This high would have to look lower, and it's not. It's breaking. So our trend that we're currently dealing with is ascending. Yes, the prior one was descending. But we need to look at current price action. Current price action is the lows are getting higher. It's imperative to break this high because that breaks this pivot and then allows this one to go higher. And then again, we're basically going to retest this somewhere in this area. If we get higher, breaking through that then really puts us in the position of saying, hey, listen, we've formed some type of bottom here, and now the market can go higher. Market went higher, formed the top pattern, market went lower. Market has gone lower now, and we're potentially forming a bottoming pattern. We need to now go higher. That's what puts us back up into this area here. Allows our small cap stocks to rally. So, not to get off on a tangent, just wanted to kind of share with you my thought process for the IWM. Hope you find this helpful. If I can serve you in any way, shoot me an email, info@specialeanalysis.com, or leave me a comment below this video. Look forward to working with you. Have a good one.